we are going to combine these three elements and we are going to put it as part of our philosophy. Okay, I have shared with you the part of our philosophy, which is identification, confirmation, execution. Okay, identification, confirmation, execution. We have been discussing that. Let's put it together as part of our rule set, and the strategy is called as confluence. Okay, what does confluence mean? It means that the three important metrics which we discussed. What are the three important metrics which we discussed? The first identification is whether the prices have opened above or below the CPR. Now, there are some queries regarding whether if there is a gap up, right? If there is a gap, then you can give it more weightage. If there is a gap, you can give it more weightage. But then you should realize that if the gap is too much, if it has gapped up and moved very quickly within the first 5 minutes above your R3 itself, then there is absolutely no point in trading that. All right. That's the whole idea. So if there is going to be a gap up or gap down and it creates such a big distortion in the price action, there is absolutely no point in trading that. Now, how will we confirm it? Based on the rule sets which we have identified. So these are the filters, previous days, high and low. And then we will wait for R1 to cross. I am using Fibonacci pivot here. R1 to cross for a buy, S1 to cross for a sell. Now, what will we do? We will buy when we get a 5-minute closing above R1. So we are going to use a 5-minute chart. All right, we are going to use a 5-minute chart and then you can participate. The beauty of this Confluence strategy is you can do it on any time frame. You can do it on any time frame. I have shown it to you as a intraday. You can convert it into a multi-day as well. We will check out on all of them. Hold on, I will show it to you. All right. So you can book profits at R2 and R3 if you are a buy, at S2 and S3 if you are a sell. How many of you got this? Give me a thumbs up. We will go and check it out. So we are going to use a 5-minute chart. I will show it to you for doing multi-day trades as well. Now, using CPR, okay, using CPR, you can also do options. Using CPR, you can also do options. And how will you do that? When you are going to put on a CPR chart and when the prices crosses R1, you can use the value of the pivot as your strike. Always it will be a in the money strike. You will trade a in the money strike because in the money strike ka delta jo hai, it is closer to 1 and you will have a faster move on a in the money delta. So let's go and check out the example. You can see here, this is the CPR and you will have to check if the prices are opening above the CPR. And then as the prices are beginning to trade above R1, you will execute your trade. And what you will do is you will place a stop loss below the CPR. You will place a stop loss below the CPR. Now, when you're going to take a look at stocks and you find that the distance between the R1 and the CPR is further away, then it is best left ignored. Okay. Now, when you are booking profit, okay, when you are booking profit at R3, that is your trade number 1. Now, it may so happen, okay, it may so happen that the prices are moving beyond your R3. All right. If the prices are moving beyond R3, then you can take the next trade above R3, placing your stop loss at R2. You can take a trade above R3, placing a stop loss below R2. So basically, you will have one trade which moves from R1 to R3, then another trade, if the trend is strong, which will move R3 and beyond. How many of you got this? In this case, your strike will be your pivot. You can see here your pivot will be your strike price. Your pivot will be your strike price. It will be a in the money strike. Okay. All of you concentrate on the concepts because that is critical for you to understand how this strategy works. You can see here in the buy, a CPR acts as a good support. A CPR acts as a good support. You can see here prices are moving up, coming down, again they are moving up, eventually going up till R3. So whenever a prices reaches R3, okay, whenever a prices reaches R3, that is your profit booking zone. You will have to book profits at R3 or at least tighten your stop loss. Because I have seen that at R3, many people tend to ignore it, and then you find that at R3, the entire trade reverses, right? That's the whole idea here. Now, when you take a look at certain examples, all your queries will get resolved, right? And if there are any queries, please put it on your Google form. I will take a look at it. Now, again, you can see here, prices are moving above R1. You take a trade, your stop loss is below your CPR, and then you can book your profit. Again, on the selling side, on the downside, right? On the downside, you can see here that prices are moving below S1. Prices are moving below S1. So it's a clear indication of bearishness, right? It satisfies all the condition. And then you can see that the stop loss should always be above the CPR when the trade begins. All right. After that, you can tweak it based on the circumstance. But then ideally, don't keep on tweaking your stop loss. You will find that the trade, most of the trades where you have lost money is where you have continuously tinkered with the stop loss, right? I'm sure that many of you will agree कि घड़ी घड़ी stop loss छेड़खानी करने से आपका नुकसान ही हुआ है, because many times based on the setup, if you're putting a stop loss, retain it so that you can be consistent more number of times. Now you will see here that in this scenario, for example, prices are opening above the CPR, prices move above R1, and then at R3 you have a profit booking zone, right? That's the whole idea. So what you are seeing here is that once the prices goes above R1, okay, when the prices goes above R1, you have to wait for a confirmation. Okay, you have to wait for a confirmation and follow through. Like for example, there was a confirmation here, prices closed above R1, you took the trade, but the prices came back inside. The trade was valid, stop loss was below the CPR, and then the price moved once again eventually, and then it met your target. But then the thing is that in all these cases, when the prices begins to slip, you can see here it goes up to R2, meets the first target, and then it comes back, and then again it goes eventually and meets it. Now, whenever you are trading any system, any strategy, okay, first you got to believe that the strategy will work for you. And to ensure that the strategy will work for you, the first thing you got to do is practice the rule sets. You have to do your practice. You have to see how the strategy has to be worked with. Then and only then you will find success. I am very confident of this strategy. Now, probably you are listening to the strategy for the first time. How can you also adopt it? First step, what you got to do is you got to believe in the strategy. You got to believe that, yes, this strategy is going to work for me, and let me see how to make this strategy work for me. Otherwise, this will be one amongst the many strategies that you have. Eventually, all of them go into the background, and you will go on into the future and seek more and more strategies. But if you want to make success out of your participation here, believe in the strategy and do a testing of the same. You can see here again, prices are coming down, breaking S1 and going towards S3. Towards the end of the day, S3 is a level. Now it may happen that after coming to S3 level, you will see that the prices are forming small body candle. What does small body candle indicates? Yeah, what does a small body candle indicate? Yeah, what does a small body candle indicate? Yeah, confusion, lack of participation, no clarity. So that's what is happening here. Okay, that's what is happening here. And that is the reason why you have to be very, very careful when you have taken a trade. It has come near the R3 or S3. You should try and book your profit. Now, if you're gone short, should be booking the profit now because the prices are not willing to go down. Right? Let's take a look at another example. You can see here that how this particular setup is there. It's coming down, it's coming up till S3. So you should book your profit or you should trail your stop. That's what you should be doing. Very good moves you will get because you are having the benefit of CPR. You are taking help of the previous day's low. You are taking S1. So the chances of this trade to succeed is higher. You can see here at R3 or S3, prices always come to rest. Prices always come to rest. So be very mindful, be very aware. Don't put your exit price after it reaches S3. At S3, you put a price and then book it out. And if it again continues, take a fresh trade. That is the best way to participate because at S3 or at R3, you will always have challenges seen in the price action for continuing its activity. I can assure you that because that's the whole idea here. That's the whole idea here. Now you can see here, once again, prices are crossing R1, right? Prices are crossing R1 and at R3. At R3, they are coming to rest. And then they continue. So this will become your trade number 2 with stop loss below R2. Right? Let's take a look at one more example. You can see here, prices open above R1 and then it gives you a confirmation. Now, once it opens above R1, place a stop loss below the CPR and wait for it to move towards R2 and R3. So when it goes towards R2, revise your stop loss a little bit. What you can do as a revision is bring it between CPR and between your pivot and R1, middle of pivot and R1, you can trail it a little bit and then you can keep on trailing and once it reaches R3, book your profit, right? So let's go and check out some example so that we will get some more clarity on how to do this. Okay, let's put on the fib levels here and let me put on this trade here and let's check them out. Okay, let me put on the index first. So if you see here, okay, if you see here, what is the kind of CPR which you can see in Nifty? Very good. Narrow CPR, right? Now, when there is such a strong gap up, okay, when there is such a strong gap up, you can see that it has surpassed all the risk parameters. So in such a case, engaging into a buy trade will not be a worthwhile proposition. You will always ideally wait for a reaction. Got it? Now, let's check out some stocks here. Okay, let's check out some stocks. You can see here that there was a narrow CPR and prices open directly at R3. If prices open directly at R3, you can see the power of R3. It continued till 1 p.m. It continued till 1 p.m. and after that you got a confirmation. So this is where you will enter, right? This is where you will enter because it made a candle and then the next candle it moved. Yes, after that it came down, but then your stop loss is at R2. And then you can see here, after you took that trade, it moved on to more beyond 1%. So it moved beyond 1%, it gives almost 2%, right? That's how you need to trade. That's how you need to find out. Let me invite some examples from all of you. Let us see what kind of trades are emerging from your examples. Let's check what kind of trade possibility will be there. Okay, granules. Let's check the 2 days trading session. So let's check 2 days trading session. Okay, granules. There was a narrow CPR. Now what has happened here is that after it has opened, the prices came down. After it has opened, the prices came down. And then it has been right here only. So what kind of trade is this? What kind of trade is there in granules? Very good. No trade. IRCTC. What trade is there in IRCTC? Very good. Gunjan, Sanjeev. Good. Kamal. What about the others? Have the others gone to sleep? What's happening, guys? Yes, Shailesh, Vivek, Yatindra. Arjun is asking why there is no trade here. Why no trade? Can someone type? Why no trade? Karthik says no trade. Why do you feel there is no trade here? Because as soon as it opened, it did not sustain. Always remember that even in 5 minutes, if a price is not sustaining, you should not be a buyer. I hope you are getting this. The problem with everyone is that khulte khulte hi lena hai. And that's what leads you to such kind of results. Is there a trade here? What type of trade? It is highly stressed level 1 trade, but then it is a type 2 trade. It's above R3. It's above R3. It's a little risky trade. Trading above R3 will becomes a aggressive trade. Your stop loss will be at R2. Stop loss will be at R2. So entry will be at 3704. Stop loss will be 3661. It's a risky trade. But then risk hai to ishq hai. So people take it literally. ये जानना है कि रिस्क है तो इश्क है, लेकिन उसके साथ आपका कैपिटल भी है. सो बी वेरी केयरफुल. Can you see this? It opened above. It was a wide CPR. It opened above R1. Next 5-minute candle. And then the move. See here at R3. R3, there was hesitation for nearly 30 minutes. So R3 is very important. Understand? R3 is very important. Very difficult to break. But once broken, chance of sustaining is there. But then now no clear participation. If you can see here, no clear participation. Yes, Laurus Labs, you can see here that once it crosses R3, it is trying to survive, but there is no clarity here. It's a trade, but it is a failed trade. So now GNFC, you can see here GNFC. Now, early in the morning, if there is a movement above R3, those trades really do well. Like you can see here, by around 11 o'clock, if there is a move above R3, the chances of the trade to do well is much higher. Okay, in this, I had turned it off. You can see here, this is the previous day's high and low. The yellow dot is the previous day's high, right? You can see here, the previous day's high. The previous day's high, and it's moving. The moment it crosses the previous day's high, you can see the movement. Now, if I put Fibonacci levels, you can see here that it goes up till R3. So here you can go in for a in the money call. So moment it crosses R1 and then it crosses your previous day's high. So you will go in for a in the money option trade. I do not advise the charts of option. I do not advise you to take a trade based on an option chart, because option chart does not have the right kind of liquidity. So the candle formation, etc., are not worthwhile. So I always trade based on the underlying. The underlying is the cash stock, and based on that, I take action. So you can see here that you will go in for a trade. You can go in for an option trade from here. You can use the equity chart. Equity chart is more consistent, and you can trade in futures. You can trade in options. The underlying is the equity. So whenever you're going to take a trade, the pivot value is already there. You know what strike is going to be there. So when a trade is in level 2, you know what is the strike. So your particular strike price, you can already put it ready, keep it ready on your terminal. And then you can execute the trade, right?